Okay, imagine this for a second. Owning like a tiny piece of a huge skyscraper, or maybe a brushstroke from a famous painting.
Or even, say, a share in a company's future profits.
Exactly. All just using your phone. Sounds kind of sci-fi, doesn't it?
A little bit, yeah.
But, well, welcome to 2025. Because real-world asset tokenization, or RWA, it's actually making this happen fast.
It really is picking up steam.
So today, we're going to unpack this. It's a pretty big trend, quietly changing, how we think about owning things
Yeah.
and investing.
And what's really interesting is how it merges the physical and the digital. You have these tangible assets.
Things you can actually touch.
Right. And now they're represented digitally, fluidly.
Yeah, so RWA tokenization, it's basically taking assets like real estate, art, bonds, you name it,
Physical stuff, financial stuff.
and turning them into digital tokens on a blockchain. Now, why should you care? Well, it's starting to break down those old barriers to investing.
Making things accessible, things that were, frankly, only for the wealthy before.
Totally. And the growth predictions are kind of wild. Some people are talking maybe $50 billion market by the end of this year, 2025.
And you've got huge players involved already.
Like BlackRock. That definitely makes you pay attention.
Oh, absolutely. When firms like BlackRock get involved, it's not just, an experiment anymore. It signals potential mainstream adoption, adds a lot of weight.
But it's bigger than just making money, right? Tokenization could actually reshape, ownership itself, market dynamics, maybe even who holds financial power.
True, though it's not all smooth sailing.
No, definitely not. There are hurdles. Regulations are still catching up, and security is always a big question mark.
Which is exactly why we need this deep dive.
Right. Our mission today is to really break down RWA tokenization. What is it? How fast is it growing? What are the real benefits?
And the risks, too. We need a balanced view.
Exactly. We'll look at real examples, see how it's working now, and then peek into the future. What could this all mean?
By the end, you should have a really good handle on why this is, arguably one of the most important shifts happening in finance right now.
Okay, let's get into it then. What is RWA tokenization? Let's nail down the basics. RWA, like we said, real-world assets.
Just means things with actual value.
Yeah.
Buildings, art, gold, company debt.
Right. Tangible things or established financial things. And tokenization.
Yeah.
That's the process of making digital representations of these assets on a blockchain.
Think of it like a digital certificate of ownership, but one that's super secure and easy to trade.
Yeah, the clever part is taking something that's usually hard to sell or split up
Like a huge building.
and making it way more liquid, divisible.
Let's use an analogy. Say you have a $1 million apartment building.
Okay.
Traditionally selling that, or even just selling a share of it, it's a nightmare. Lawyers, brokers, paperwork, takes forever.
Oh, yeah. Weeks, months sometimes.
But with tokenization, you could, say, divide that building into 1,000 digital tokens, each worth $1,000.
Okay. Makes sense.
These tokens live on a blockchain, maybe Ethereum, maybe something else. And that blockchain acts like a super secure, transparent ledger.
So now someone with just $1,000 could own a piece of that building.
Exactly. And this is key. They could potentially trade that token much more easily, almost like trading crypto.
Right. That's the democratizing bit, isn't it? Lowering the entry point.
Precisely. Breaking down these massive assets into bite-sized pieces.
So how does it actually work behind the scenes?
Well, first you got to verify the asset, make sure the building exists, the ownership is clear, all that legal stuff.
Due diligence.
Right. Then you create something called a smart contract on the blockchain.
Ah, smart contracts. Heard of those.
Think of it like a digital rule book for the tokens. It automatically defines how many tokens there are, the rules for trading them, stuff like that. No need for a traditional middleman to enforce it.
Gotcha. Self-executing rules.
Then the tokens are created or minted. People can buy them, sell them, hold them in a digital wallet, just like Bitcoin or Ether.
And the blockchain keeps track of everything, publicly and securely.
Yeah, that transparency and security is a huge part of the appeal. Makes it hard to tamper with records.
And it's not just real estate, right? You mentioned art.
Oh, yeah. Tons of possibilities. A $500,000 painting, maybe tokenize it into 5,000 shares at $100 each.
So I could own a tiny piece of a masterpiece.
Potentially. Or a company could tokenize, say, a percentage of its future profits. Investors buy tokens hoping the company does well.
That's interesting. So fractional ownership is the big theme here.
Absolutely. opening up all sorts of investment doors that were previously locked tight for most people. The sheer variety of assets being explored now is amazing.
Okay, but why blockchain? Why not just a regular database?
Good question. Security is a big one. Blockchains are inherently hard to hack or change. Then there's cutting out the middlemen.
Fewer brokers, banks, lawyers.
Potentially, yes, which means lower fees and faster transactions. Trading tokenized real estate could, in theory, take seconds, not weeks.
That's a massive difference.
But we need to be balanced. Blockchains aren't invincible. Hacks can happen.
Right, we've seen that in DeFi.
And the rules, the regulations, they're still being written in many places. We'll get more into those challenges later.
Okay, but the core idea, digitizing the world's wealth on a blockchain, making it easier to own, trade, invest.
That's the gist of it, and it's already happening.
Right. So next, let's zoom out. How big is this market right now in 2025? And who are the main players pushing it forward?
Okay, let's look at the current landscape.
So 2025, RWA tokenization. Is it still niche?
Definitely moving beyond niche. It's becoming a real force in global finance, not just a crypto thing anymore.
Got numbers.
Yeah, reports suggest that by the end of 2024, the value of tokenized RWAs, and this is excluding stablecoins, which are a different beast, was already over $15 billion.
15 million. Okay.
And the projections for the end of this year, 2025, around $50 billion.
Wow, that's more than tripling in a year. What kind of assets are leading that?
Mostly real estate, bonds, some commodities. Those are the big ones so far.
And looking further out, those predictions get even bigger, don't they?
Oh, yeah. Some are truly massive. By 2030, you see figures ranging from, say, $2 trillion from McKinsey.
2 trillion.
All the way up to maybe $30 trillion by 2034, according to Standard Chartered.
30 trillion. That's a huge range. Why the difference?
Well, it really hinges on a few big ifs. How quickly do regulators get comfortable and create clear rules?
Right, the regulatory piece.
And how fast do the big traditional finance players really jump in with both feet?
But the trend seems clear. It's moving from theory to reality.
Definitely. So who's driving this? You mentioned BlackRock earlier.
Yeah, they launched their BUIDL fund in 2024, didn't they? Tokenized U.S. Treasury bills.
Exactly. And it quickly became one of the biggest RWA tokens out there. That's a massive signal from the world's largest asset manager.
And others are involved too.
Oh, yes. Franklin Templeton has their on-chain U.S. government money fund. Shares are tokens on Stellar and Polygon, merging old and new worlds.
So traditional funds, but using blockchain rails.
Precisely. Even Goldman Sachs is exploring tokenizing bonds on their own digital asset platform.
These are heavy hitters, not just small fintech startups.
Absolutely not. And their involvement brings, trust, regulatory know-how, and access to huge networks of investors. That's crucial for getting wider adoption.
Makes sense. But it's not only the TradFi giants, is it? What about the crypto native side?
No, plenty of innovation there, too. You've got platforms like Centrifuge. They were pioneers in bringing RWAs like private credit and real estate financing into the DeFi world.
DeFi, decentralized finance, for anyone needing a quick reminder.
Right. Then there's Securitize. They're actually an SEC-regulated platform, which is important. They help bring assets like company stocks or fund shares onto the blockchain legally.
Okay, so bridging the gap with compliance in mind.
And you have things like Pax Gold. It's the biggest tokenized commodity market cap, over $500 million.
And each token is backed by real gold.
Yep. Physical gold bars sitting in vaults in London. You can actually verify it. So, a direct link to a real-world asset. These projects show it's already working in practice.
But you mentioned challenges earlier. Regulation is one.
Still a major one. The rules are different everywhere. What's okay in Singapore or Switzerland might not be clear in the US or Europe. Creates complexity.
And liquidity. Just because you tokenize something doesn't mean people will instantly want to trade it.
Right, exactly. Especially for more niche assets, you might tokenize a rare collectible, but finding a buyer for that token quickly might still be hard. Market liquidity isn't guaranteed.
Still, sounds like progress is being made. You mentioned Singapore, Switzerland?
Yeah, some places are creating clear frameworks. And it's telling that something like, 86% of Fortune 500 execs are reportedly exploring tokenization now?
86%. That suggests it's moving towards the mainstream.
It really does. That evolving regulatory landscape is probably the key factor for future growth. We need clear, consistent rules globally.
So what's pushing this forward despite the hurdles?
A few things. Growing trust from institutions. partly thanks to the big players getting involved.
Better technology, too.
Definitely. Blockchain tech itself is improving. Things like Layer 2 solutions are making transactions faster and cheaper.
And that core appeal we talked about, fractional ownership.
That's a huge driver. Plus, you're seeing whole ecosystems pop up. Real estate platforms like Propy, debt markets like Maple Finance.
Attracting different kinds of investors.
Yeah, from regular retail folks to big family offices, it's broadening out.
Okay, so to sum up the current scene, dynamic, growing fast, big names involved from both TradFi and crypto, but still navigating those regulatory and liquidity challenges.
That's a good picture of it.
All right, now let's dig into the specific pros and cons. What are the real benefits making everyone so excited? And what are the challenges we absolutely need to keep in mind?
Yeah, let's weigh them up.
Okay, benefits first. What's the biggest draw? You've mentioned it a few times.
For me, it has to be fractional ownership. It's revolutionary, potentially.
How so?
Well, think about that $10 million office building or the $500,000 painting. Before, who could afford that? Very few people.
Right, exclusive markets.
Tokenization lets you break it down. Sell shares for maybe $100, maybe $1,000. Suddenly, almost anyone can own a piece.
That really does democratize things, doesn't it? Opens up access. Imagine owning a slice of prime real estate just through an app.
It's not just about access either. It lets people diversify their investments in ways they couldn't before. Put a small amount into art, a bit into real estate, things like that.
Good point. Okay, what else? Liquidity.
Huge potential benefit. Assets like real estate, fine art, private equity, they're notoriously liquid, hard to sell quickly without maybe taking a big price cut.
Yeah, selling a house can take months.
Tokenization turns these into digital tokens. And those tokens can, in theory, be traded much more easily on blockchain platforms.
Like swapping crypto.
Potentially that fast, yeah. Think about selling your share in that building on Propy, maybe minutes instead of months. That makes these markets way more flexible.
When costs. Does it save money?
It should. By cutting out some traditional middlemen brokers, maybe some banking functions, you reduce fees. And faster settlement also means less cost tied up in the process.
Transparency seems like another big one.
Absolutely. Every transaction recorded on that public blockchain ledger, anyone can usually see it. It's auditable, verifiable.
Reduces chances for fraud, builds trust.
That's the idea. Look at Pax Gold again. You can verify the gold backing those tokens exists. That's powerful.
And global access.
Right. These digital tokens, they can be traded 247 anywhere in the world with an internet connection, breaks down those old geographical barriers, creates a more unified global market.
So fractional ownership, more liquidity, lower costs, transparency, global access. That's a pretty compelling list.
It really is. It represents a potentially significant step up from how we traditionally handle asset ownership. More efficient, more accessible.
Okay, but let's not get carried away. Time for the challenges. What's the biggest roadblock?
Regulation. Without a doubt, it's the elephant in the room.
How so? Just that it's unclear.
It's inconsistent, fragmented. Different countries, even different states sometimes, have different rules or no clear rules at all for tokenized assets.
So uncertainty for investors and the companies doing the tokenizing?
Huge uncertainty. If you buy a token representing a piece of property, are your ownership rights legally recognized in that place? In some places, maybe yes, thanks to platforms like Securitize working within SEC rules. In others, it's murky.
That sounds risky. What else? Security.
Always a concern in the digital world. The underlying blockchain might be secure, but what about the platforms built on top? The smart contracts.
Right. Smart contracts can have bugs or flaws.
Exactly. We've seen hacks in DeFi where poorly coded contracts were exploited, leading to huge losses. The same could happen with RWA platforms if security isn't absolutely top-notch.
So you need trust not just in the blockchain, but in the specific project and its code.
Absolutely critical. Rigorous auditing, ongoing vigilance. It's essential. Investors need to understand that risk.
And what about market risks? You mentioned liquidity earlier.
Yeah, just because you can tokenize something doesn't mean there will be a deep, active market for those tokens.
Especially for weird stuff like tokenized vintage lunchboxes or something.
I feel maybe. But even for things like niche art or private company shares, if there aren't many buyers and sellers, you might find it hard to sell your token when you want to or at the price you want. Liquidity can be thin.
And the token's value can swing around.
It can be volatile, yes. It depends on the value of the underlying asset, of course, but also potentially on sentiment in the broader crypto market, which can be quite choppy.
Okay, so regulation, security, and market liquidity risks, those are pretty significant hurdles.
They are. It's not a magic bullet. The benefits, access, liquidity, transparency are real and transformative, but the challenges need serious attention.
But the good news is people are working on these. Regulations are slowly evolving.
They are. It's a process. As adoption grows, there's more pressure to create clear frameworks, but it takes time.
Right. Okay. So we've got the theory, the pros, the cons. Let's make it more concrete. Can we look at some real-world examples? How is this actually being used today?
Yeah, let's look at a couple of case studies that really helps bring it to life.
Great. Where should we start? Real estate seemed like a big one. Propy.
Propy is a great example. They made waves back in 2021. Sold a Florida apartment entirely as an NFT on Ethereum.
An NFT, like the digital art things.
Sort of, but in this case, the NFT represented legal ownership of the actual physical apartment.
Huh. How did that work?
Basically, the property ownership was tied to these digital tokens. Buying the tokens meant buying the apartment. The whole process was much faster, cut out tons of traditional paperwork, everything recorded on the blockchain.
That must have saved a lot of time and hassle.
It was a powerful proof of concept. Showed how blockchain could seriously streamline real estate deals.
So where are they now in 2025? Have they done more?
Oh yeah, they've expanded quite a bit. Tokenized various properties, commercial buildings, vacation homes.
Is that a specific example?
Sure. Think about a, say, $5 million office building in California. Propy helped divide its ownership into 5,000 tokens, each worth $1,000.
So again, opening it up to smaller investors, people who couldn't buy a whole office building.
Exactly. Lets them get a piece of the commercial real estate market. And these tokens aren't just static. They can often be traded on secondary markets.
Providing that liquidity we talked about.
Potentially, yes. Gives investors flexibility. Maybe earn some rental income distributed via the tokens, too.
Sounds impressive. Any catches? Still facing challenges.
Well, yeah, they still have to navigate the local regulations for property ownership, which can vary a lot, and the liquidity on those secondary markets is still developing. But it shows the direction things are heading.
Okay, real estate makes sense. What about that art example? Masterworks.
Right, Masterworks. Their goal is to democratize the fine art market. Historically, buying multi-million-dollar paintings, that's a very small club.
The super rich, basically.
Pretty much. Masterworks buys high-value artworks, think Banksy, Basquiat, Warhol, and then they effectively sell shares in that painting using tokenization, though they structure it legally, often as shares in an LLC that owns the art.
So you can own a fraction of a famous painting.
That's the idea. For example, in 2024, they took a $10 million Basquiat painting.
Wow.
And offered 100,000 shares at $100 each.
$100 for a piece of a basket.
Effectively, yes. It attracted investors from over 30 countries. People who could never dream of buying the whole painting now own a fractional interest. They hope the painting appreciates in value.
How does blockchain fit in there?
They use it to meticulously track who owns which share, helps ensure authenticity, and provides a clear ownership record, gives investors confidence.
Can you trade these art shares easily?
Masterworks does have its own secondary market, so you can trade them. But honestly, the liquidity there is generally lower than, say, trading Bitcoin on a major exchange. It's still a bit niche.
So it's not instant liquidity, but it's more liquid than trying to sell a fraction of a painting traditionally.
Exactly. And they've been successful. By 2025, they'd tokenized over $500 million worth of art. It really demonstrates how this can open up exclusive markets.
Still need to remember the risks, though, right? Art prices can go up and down.
Oh, absolutely. The art market itself is volatile. And again, the value and tradability of your share depend on demand for that specific artwork and its shares.
Okay, so Propy and Masterworks, they show tokenization in action, making assets more accessible, streamlining things, using blockchain for trust.
But also highlighting that it's still evolving. Regulatory hurdles, market liquidity, these are ongoing themes.
Right. They're pioneering, but it's not fully mature yet.
Yep.
Still gives us a good glimpse of the potential.
Definitely just the beginning.
All right, so looking beyond these current examples, where is this all headed? What does the future of RWA tokenization look like? Let's gaze into the crystal ball a bit.
Okay, the future outlook. This is where it gets really interesting and maybe a bit speculative.
We heard those huge market size predictions earlier. Trillions of dollars by 2030 or 2034.
Right, numbers like $2 to $4 trillion from McKinsey, maybe $30 trillion from Standard Chartered.
If even the low end of that happens, it's not just a bigger market, it's a fundamental change, right?
Absolutely. It implies a massive shift in how we own, trade, and interact with basically all kinds of assets globally.
Paint a picture for us. What might that future look like for, an everyday person?
Imagine using just the simple app on your phone. Through that app, maybe you invest $50 in a solar farm being built in Africa.
Okay.
Another $100 goes into a share of a vineyard in France. Maybe $200 into a token representing future revenues from a promising local startup.
So incredibly diverse, global, fractional investments, all super accessible.
That's the vision. Seamless access to a global pool of assets that were previously completely out of reach or incredibly complex to invest in.
What needs to happen technologically to make that smooth?
Well, blockchain tech needle to keep improving. We mentioned layer 2 solutions. They need to become even faster, cheaper, and able to handle massive scale. Make minting and trading tokens almost free and instant.
And what about other tech trends? AI.
Ooh, that's a fascinating intersection. AI could potentially integrate with tokenization platforms. Imagine AI helping manage tokenized assets automatically, analyzing market trends for tokenized real estate, maybe predicting the value appreciation of tokenized art.
Or even creating personalized investment portfolios of tokenized assets for you based on your goals and risk tolerance.
Exactly. Automated advisors, but working with this much broader, more granular range of tokenized real-world assets could make sophisticated strategies accessible to everyone.
The democratization theme.
It runs through everything. The potential for wealth democratization is probably the most profound implication.
How so? Beyond just investing.
Well, if more people can participate in productive assets, businesses, real estate, infrastructure, it could lead to broader wealth creation, less concentration at the very top.
Could it help fund things differently too, like social impact projects?
Potentially, yes. Imagine communities collectively funding local renewable energy projects or affordable housing developments by buying tokens representing ownership or future returns. It could unlock new funding models.
Sounds amazing.
Yeah.
But what needs to happen for this future to materialize? What are the big ifs?
We keep coming back to it, but global regulatory harmony is huge. Countries need to get on the same page about how to treat these assets legally.
So you can trade tokens across borders without massive legal headaches.
Precisely. And security needs constant enhancement. As the value locked in these systems grows, they become bigger targets. We need robust defenses against hacks and fraud.
So it's a bright potential future, but not guaranteed. Needs work.
Definitely. It requires ongoing innovation, sensible regulation, and collaboration between the tech world, the financial industry, and governments.
An optimistic but realistic view, then. We're seeing the foundations being laid right now for something potentially huge.
Exactly. It feels like we're in the early innings of a major transformation. You're watching it unfold.
Okay, fascinating stuff. Let's try and bring all these threads together now as we wrap up.
Sounds good.
So let's summarize what we've unpacked today. RWA tokenization. It's fundamentally about digitizing real-world stuff, buildings, art, bonds, you name it, onto blockchains.
Making them easier to divide, trade, and own.
And the main impact, increased accessibility, breaking down those old barriers so more people can invest in things that were previously off limits.
Fractional ownership is key there.
Right. We're seeing a market that's already, what, $50 billion maybe by the end of this year?
Roughly, yeah. And projected to hit the trillions in the next decade or so, with big players like BlackRock already deeply involved.
The benefits are pretty clear. Fractional ownership, potentially much better liquidity for traditionally illiquid assets, faster trades, lower costs, more transparency.
And the potential for global 247 markets, a more inclusive financial system.
But, and there's always a but, we can't ignore the challenges.
Absolutely not. Regulation is still patchy and uncertain in many places. Security risks, hacks, flawed smart contracts are real.
And just tokenizing something doesn't guarantee a liquid market will appear overnight. Market risks remain.
It's a developing space. Huge potential, but requires caution and diligence.
So this isn't some niche crypto fantasy anymore. It's a serious trend with the potential to really reshape finance. A glimpse into a future where maybe wealth and investment opportunities are spread much more widely.
It really is. But achieving that positive outcome, that truly accessible and secure ecosystem, that's going to take continued effort from everyone involved, the innovators building it, the regulators overseeing it, and the investors participating in it.
Well said. It really leaves you wondering, doesn't it? What will things look like in 10 or 15 years if a big chunk of the world's assets are represented as these digital tokens flying around the internet? It's definitely something to keep an eye on.